Hello and welcome to Charting the Markets. With me, Sean Mearison, Senior Market Analyst at IG South Africa. On today's economic calendar, we do have that all-important US CPI data. We're expecting inflation to come in at 3.6% year on year. Obviously, markets are likely to react to that, whether this figure's better or worse. High inflation could see some strength. Markets, a lower than expected inflation figure, would be expected to be positive for markets. But let's wait and see how charts are setting up ahead of that data. So it's looking at the US dollar index, starting off with the US dollar index or basket. We can see that longer term trend is still up for that dollar, but we do have a short-term correction underway at this point in time, and we've moved into oversold territory. Now, this short-term pullback has taken a bit of the shape of a flag type formation, which in technical analysis terms is considered a bullish indication, suggesting that there's a weak move down after an aggressive move up. But to trade a pattern like that, you want to see a breakout first, and you'd expect the breakout to happen on the upside, but it hasn't happened yet. So criteria for this pattern to become relevant, we'll see a close above that 105, above this shaded area on the chart, which is the flag, preferably for me above that 105.70 mark, in which case we start looking at targeting a move to retest that high at 107.00. Now we are oversold, and I think another bullish indication, you just want to see that stochastic moving out of oversold territory where it's sitting right now. That hasn't happened yet, and we are still in the midst of a pullback. And if we do get a better than expected inflation figure, well, maybe we could see that dollar start to soften a little bit more. But we've got a long way to go before we'd say that longer-term trend is broken. So we're not looking at shorting the dollar at this point in time. We're going to see where does it fall. If that correction continues to pull back, we'd be looking at a bullish reversal. If it breaks that 105 level, closer towards that 104.10 level for long entry. So not considering short positions on the dollar just yet. We're looking for either a breakout scenario, which is breakout of that flag and above that 105.70, or in the event that we do continue to pull back, looking for a bullish reversal closer to that 104.10 mark. Now, the euro dollar, we've seen a bit of a channel breakout here. So we've considered this longer term trend to be a bit more sort of sideways, although we had that short to medium term downtrend in place. That has started to reverse over the short term, at least. So we've had this price breaking above channel resistance, breaking above resistance. It's now testing this 1.063 north mark. In so doing, we have moved into overbought territory. So we have some sort of ambiguity in signals there. Price comes first, in my opinion. So we watch what's happening with price and use the other indicators as supporting information. So in this situation, we're looking for a break above 106.30 to start targeting move to 1.069. So that'll be euro strength and dollar weakness. Alternatively, from that breakout, looking for a bit of a pullback towards support for long entry. If we do break below that, then we'd say, okay, well, there's a bit of a reversal, and this trend, short to medium term trend reversal has failed, and we are resuming to the downside, in which case we start looking towards 1.0445 as a downside target. Now, the picture on cable, not too dissimilar. But we are testing resistance at this point in time, both horizontal and trend line resistance. Previously, we talked about the steepening trend, downtrend, so there was some acceleration to the downside, so pound weakness, dollar strength. But cable has started to reverse since then, broken above that initial trend line, and we're finding resistance on this trend line right now. So the bulls want to see a strong close above that trend line resistance before targeting a move back towards about 1.2562. But if we fail at this level, and again, this could be data dependent on today's inflation data, we see a pullback, see a negative close, a bearish type engulfing, that could prompt short entry, because we'd have a bearish reversal off resistance and from overbought territory. Now, in that situation, we'd look at having a close above that high, as the reversal high as a stop loss indication, while targeting a move back down to 1.2160. So it's all happening here on the cable. You see how the price of the pound versus the dollar reacts to that data a little bit later. Moving over to some indices and starting off with the US Tech, or the Nasdaq 100. Now that long-term trend is up, so we've always been looking at keeping a long bias to trades. Nasdaq has been an outperforming index for the year thus far. We had a short-term bit of a range consolidation. We've had a breakout, and we've moved past what we considered next level resistance at 15,250. Now, technically, we do have a breakout. Still, again, watch out for that data a little bit later, but that breakout is there and suggesting a move back towards about 15,630. Well, that being the next level of resistance. Now, traders who are long into that breakout, I obviously want to watch the news, but also if you're trading just purely technically, having a stop below a 1 or 2 period low, depending on threshold for risk, might be preferable. For me, I think that's a decent sized long bodied candle, that produced that breakout. So maybe I may close below that as that stop loss indication, failed break. And we do get that situation, would wait for weakness to play out. Look till we see where that index finds support again, and then look for long entry around support, provided that longer term trend stays up, which it is currently considered. S&P 500, the chart not too dissimilar to that of the Nasdaq 100, although our pullback here, this correction of that longer term uptrend, did see a temporary break of that 200-day simple moving average. Now, for me, that's not necessarily a new downtrend, but that would have been suggesting that maybe we're moving into a bit of a longer term sideways trend. It's a bit of a hard one to gauge at this point in time, but it does find support around that area and around that trend line support, and we have started to rally up, and we have closed above that 4,325 mark. We're trading significantly higher. Next level of resistance on the upside being 4,460. My preference from here is if we're not already long, if we're already long and have a stop loss on a close below one period low, a 1 day low. These are all daily charts that we're looking at. Alternatively, looking for new long entries, look for a bit of a pullback from overbought territory towards one of those support levels for long entry again. But certainly not looking at picking a short, levels to short the index right now. There is some bullish momentum, and that trend is still a little bit undecided. Not too convinced that it's broken just yet. Now, the DAX 40 or the Germany 40, that's moved into a sideways consolidation over the short, medium, and the longer term trend. Well, certainly over the medium to long term. We've had a reversal of support. Nice move towards our next level of resistance, 14,885. We had a close above that level, and we're seeing some continuation today. So we do have an upside breakout that does suggest that we could see a move back up towards 15,990. We do have data that's going to influence markets today, so we really want to keep an eye on that. But I think if you're looking at from a technical basis, we've moved up. We are in overbought territory, but we can stay overbought for quite some time if we do have a strong momentum up. So having a stop loss on the close below one or two period low, whilst targeting a move to that 15,990 at this point in time. Now the FTSE 100 continues to grind sideways, and perfect example of a market that has been in a range-bound trading environment over the longer term, rather than a trending environment. And to reiterate what we've said in previous weeks, we look to trade between the levels, which it has been conforming quite nicely to over the last little bit. Most recently, we had this reversal of support at 7,410 mark. We've had a break of that resistance, although that was quite a tricky one to trade because of the size of that candle. But nevertheless, it did manifest, and it did target a move towards 7,700. I'll be watching today with interest. If we do have when we're in a sideways range-bound environment, we're not looking at keeping a long or short bias. We're looking at trading either way, trading between those levels. So for me, the next opportunity would be a reversal around this resistance level, bearish reversal as a range trade, as a short opportunity, or for a new long opportunity, I'd like to see an upside break. So a close above that 7,700 mark. In that situation, we'd be targeting 7,870. Looking at a stop below 1 or 2 period low. If we get the reversal, the bearish reversal instead, then we'd look at using that reversal high, a close above that as a stop loss indication, while targeting move back down to initial support sitting at 7,560. But again, we are trading between the levels. It's a range-bound environment. We're not looking at riding out winners. We're trading to levels. We're looking at using limits to take profits when we do reach our levels. And if it's not a reversal, we're looking for breakouts, either or. All right, looking at some commodities, starting off with Brent crude. Now, this has been obviously a lot of influence here by geopolitical risk. Obviously, we have the Palestine or the Hamas-Israel war, which has commenced. It's in day 6 now. Initial reaction to that was a gap higher. So showing you that, obviously, Middle East, a lot of production of oil within the region, worries about, restricted supply, that market gapped higher. It was followed by some news from Saudi Arabia that they would look to provide support to the market. And we saw yesterday oil prices coming down. So it gives a bit of an ambiguous picture here at this point in time. But our view is that longer term trend is up, although it's looking a little bit more fragile at this point in time. When I see a gap higher like that, especially when it's against the trend, for me, I view that as a positive momentum for that price, whichever is concerned, because it's showing some momentum, changing that direction. So it's considered a breakaway gap. Personally, that gap has been filled. If you're looking at trading, gaps have been filled. But I think for long positions, if we do get this candle currently close above the halfway mark of this red candle, we'd have something like a harami, which is a bit of a bullish pattern. And then we'd start targeting renewed gains on that. And in that situation, having a close below either gap support at 84.51 or the reversal low at 84.75 odd might be a stop loss consideration while targeting a move initially back towards about that $89.10 per barrel mark. And to unlock further gains, you'd like to see the price closing above that level to look for a move possibly towards about 95.40. But we're taking each level as it comes. Know that obviously this high risk market to trade at this point in time relative to the geopolitical risk that is being imposed. Another market reacting to that geopolitical risk is obviously gold. Finding some safe haven demand and also benefiting from that softer dollar after Fed comments earlier on this week. Now, we've had that reversal of support. We've had this gap higher, which coincides with that Middle Eastern tension, Middle Eastern war. We've had this gap higher, so showing some momentum to that upside after a bullish price reversal of support. Remember, we are still here in a range trading environment on gold over the long term, so we're trading between levels as well. We've traded through that 1865 level, close above that 1890 becomes that next upside target. If we do get through that, I think we can start looking at, if we're conservative on the resistance, probably about $1925 per ounce on spot gold. Now, platinum has been an interesting one. That's been a range bound in a price environment for a while, but it was starting to tease the idea of a longer term downtrend starting to emerge, which is platinum prices are already quite depressed. So that was a bit of an interesting one, but we broke that level of support, which has been holding for quite some time, that 875 level. But since then, we have rebounded off the level. So I would argue that this move higher, is a relatively a soft or weak move higher relative to a strong and aggressive move lower. So this could be a bit of a bearish indication. I think if you are looking for, if you prefer to, it's hard to chase a market lower that is looking quite depressed already. But I think maybe looking for this consolidation here, just to break lower, maybe looking for a close below that 875 on the short side. If you're looking for a short side, looking at a close above today's high as a possible stop loss, and then targeting the low of 854. Now, if you prefer to be bullish on the markets, I think just wait for, we do have a price reversal, although the momentum doesn't seem so strong. To see some strength or some conviction on that, I'd like to see just a close above that trend line there. Close above that dark trend line I've just drawn on the chart there. If we can get above that with some momentum, then start looking at $940 per ounce as the upside. So that would provide a more bullish scenario. But as it stands, I think it's looking a little bit bearish. But I would view this move higher, maybe as more of a short-term consolidation, possibly a bear flag. And so I'd be watching that very carefully, watching that trend line, and maybe even just drawing in a little channel here to see, if we do move on the lowest end of that channel, below that 875 level, maybe that considers a retest of this recent low. All right, that's all the charts from me. I'm Sean Murison, Senior Market Analyst at IG South Africa. Thanks for watching.